Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. In questo momento indici piuttosto deboli, ancora naturalmente l'attenzione torna sull'economia dopo la giornata di venerdì Alibaba Day, ma ne parliamo con il mio ospite qui sul floor, come vedete è Kenneth Polcari, che è direttore delle operazioni sul floor per O'Neil Securities. Kenny, ben ritrovato.
How are you?
I am very well, how are you?
I'm great, thank you.
I can see you still wearing orange. Orange was the color on Friday, a huge day on Friday.
Right.
Today, of course, we see less happiness, we can say, on the floor, but we had a fantastic day. Everything was smooth, and Alibaba Day was pretty good, not just for Alibaba.
No, it was a great day. It was a good day overall for the market. Don't forget, it was also quadruple witching, so therefore you had increased volumes both on the opening, on the close, and during the day. And on top of that, we had this, this really all global eyes just on the New York Stock Exchange over the Alibaba IPO, which actually went off without a hitch. Very well priced. The stock opened up about 32% from the IPO price. Certainly a dramatic opening, but I think what that tells you is that the stock ended up trading in a very tight range after it opened all day and closed right around where it opened. So what that tells you is that process, that transparent process of price discovery here at the New York Stock Exchange, I think worked. It could not have worked any better. It was perfect. And so everyone was happy.
You opened a little bit late, of course, later than usual, but better be cautious than sorry, after what we saw in the past. And it was a high demand for the stock.
And that was just it, right? It's not a rush to open it, right? It's not a rush through that at all. It's really the process of finding the right price. And so that was a big deal, right? It was a global deal. There were people around the world that were trying to stay involved, get involved, be involved. And so therefore it makes perfect sense. And that's the process here, right? At the New York Stock Exchange. And so therefore it makes perfect sense. It's like I said, and nobody complained about it. It was the idea of finding the right price. And in fact, we did that. So kudos to everybody.
Absolutely. Kudos to everybody. Yeah. Now let's talk about today. We were saying that we're going back down. Economy is again at the center of the attention here after what we had last week, the expiration day, as you were saying. From China, we had like a little bit of water on fire. Right. No, we're not going to see an increase of help.
Well, it's interesting because last week China made 2 or 3 attempts at, stimulating. And so, it worked, and there was some discussion about they're doing that in front of this big Alibaba IPO to create the demand, and that's all well and good. And then over last night, there's some speculation over tomorrow's flash PMI report out of China is going to be weaker than expected. And one of the Chinese finance ministers came up and did say that they were not at the moment prepared to add any more stimulus. So what does that do right away, right? It causes that once again the angst and anxiety about the central banks. And so this is the conversation we keep going back to: is the market moving higher because every central bank is stimulating? And the minute they talk about not stimulating, it creates an undercurrent of nervousness. And so that's what you're seeing. Certainly Asian markets took it on the chin overnight. And then in Europe this morning, kind of that tone overflowed to Europe. But then on top of that, you have the whole Scottish referendum vote. And even though they voted no last week and the markets rallied on Friday, over the weekend, you did have the Scottish National Party, and you had the leader of the Scottish National Party come up and he's not very happy with the no vote. He's not really buying into it. He's causing some more angst and anxiety. And so that's just another reason for European investors to take some money off the table, because it creates uncertainty once again. Over here this morning, our futures are weaker. Our market is down a little bit, only 50 points. It's not the end of the world on the Dow Industrial is down 50 points. Certainly the small cap names, which have been under pressure, continue to be under pressure. But listen, again, if you're worried about the market, backing off at all, if you're worried about the economy, living up to it, the names that you're going to really take some money out of are the ones that are the high flyers, the ones that are difficult to get in or get out of, and so therefore you're going to take money out of them. You're not going to sell the big blue chip Americana names right off the bat because they're not at that much risk. And I think that's exactly what the market is telling us.
You're all back to the Russells and to NASDAQ.
And you see those are the ones that are under the most pressure. Certainly the S&P, the broader index, is under a little bit of, it's almost down 1%. And because I think technically we broke that magic 2,000 number once again, right? And so 2,000 becomes resistance again. And so we seem to be stuck, I think, between the 50-day 1975 and 2000 on the S&P. And we might do that for the next couple of weeks until we get into earnings season, which is going to start the second week of October. And so people are kind of anticipating, what are the earnings going to be? Are they going to be as strong as the second quarter? And so, the jury's kind of still out until that happens.
In the meantime, this week we're going to have a lot of numbers from the economy. Today, a little bit disappointing from the housing market, and then we're going to read the GDP and see if finally, really if the bounce back in the second quarter has been that big.
Is real. And this is a big week for Fed speeches, right? We've got almost today, tomorrow, really all week, right up until Thursday. You're going to have different Fed presidents kind of taking to different podiums and talking. And so what's going to also be interesting is that investors and traders are going to listen to what they say, right? Every one of them's got a different point of view. Are they going to support Janet Yellen in her speech last week, where she's talking about, yes, the end of QE, and we know that, but rates will stay lower for longer? Are they going to support that? Are some going to be a little bit more hawkish? And so, traders especially, more so even than the long-term investor, because they've made their bed. They're prepared. But the trader ones are the ones that are going to listen to the words and what they say, because they're going to try to glean any little bit of information that's going to cause some volatility in the market or cause the market to move rapidly one way or the other. And so you'll kind of see that all week. That, coupled with the macro data, certainly is going to continue to paint the picture.
And Kenny, finally, the Federal Reserve really seems to move the market, not only from every perspective, and from Australia, from the G20. Right. Actually, we heard the G20s are very worried that the market is not going to go well in the long term if all the bankers, the central banks, will keep inflate the money.
And so therefore that just riles it up once again, right? And it gives this sense of the market being manipulated or artificially stimulated. And we've been talking about this. I think part of the issue here in the United States is, we do have the end of QE. Our market is not falling apart yet. Rates will stay low, so it's a matter of, can the economy in fact catch up, or will we start to run into some trouble, and then Janet Yellen and the Fed are going to have to revert back to some type of a stimulus program. I think the jury's still out. I think most people think, it may be a little bit of a rough ride, but we're through the woods. But I guess we're going to see as we move into the end of the year.
But we also have the ECB on the other side. Even if Janet Yellen decides to stay the course and, maybe to raise interest rates sooner, but still we have stimulus in Europe.
And Japan. And certainly we're seeing what's happening to those currencies. We're seeing what's happening to the dollar as a result. The dollar is strengthening only more so because those currencies are weakening. Our dollar is not strengthening because our economy is that much stronger. See, that would actually be a good thing. If our dollar was strengthening because the economy was really going gangbusters, then it would support it. But the fact that our dollar is strengthening only because the other currencies are weakening is going to present itself another problem if the economy doesn't catch up.
We'll see. It's a never-ending problem here.
No, it's just the saga continues.
Absolutely. Kenny, have a great week and thank you very much.
Thank you very much.
Grazie a voi per l'attenzione. Alla prossima.